Now, please turn your attention to our projectors, where Jamie Reeve, wealth strategist at Northern Trust, will introduce our speaker virtually.
Hello and Happy New Year, fellow Rotarians. Jamie Reeve here from Northern Trust. I welcome you to the first Rotary meeting of the year 2022, and I'm glad it's a breakfast meeting. I'm sorry I can't be there in person. But today it's my pleasure to welcome back to the club my friend Mike Antonelli. Last year, Mike spoke to the club about the topic of cryptocurrency, which was well received and enjoyed. And I'm sure today everyone is going to have similar responses to his outlook on things economic. A bit of background on Mike. For the last 18 years, he's been at Robert W. Baird. You can read him on various publications and marketing pieces that Baird puts together. Plus, his Twitter handle, Dad in the Bay, reflects how important his family is. Mike and I and our families are friends through the Shorewood Swim Club, where we're both active as volunteer boards of directors. So today, please welcome back to the club my friend Mike Antonelli. Mike, take it away.
Nice. Thanks, Jamie. If you're at home watching this, I really do appreciate that intro. Jamie's a dear friend of mine. We've interacted not only through the Shorewood Swim Club, but through kind of Milwaukee's community, and actually my son dates his daughter, so we do have a connection there. Thank you guys so much for being here. I understand and know how difficult these times are, and to show up someplace live and in person to see somebody speak is a real a Herculean effort. So thank you, and if you're watching at home, I thank you for also tuning in. I'm going to just talk a little bit about the world, and I'll talk a little bit about my view of the world, and then I'll end on a couple different interesting things that I think might change your mind about the future. I want to talk a little bit about the future with you. If you have any questions, Mary told me to say that you can text her. If you're at home, if you have any questions, her number is 414-840-9623. So feel free along the way to text Mary. She'll bring them to my attention if you have any questions in the crowd. Anytime you want to ask a question, just raise your hand. I'll literally stop talking, and you can ask me a question about anything. Just as a one more second intro about myself, I moved here in 2007 from the University of Chicago. My wife and I moved from Chicago to Whitefish Bay. We've lived there since. I started with Baird in 2007. Which is crazy. I started my career right before the global financial crisis, the worst crisis to hit the United States since the Great Depression. And then I changed jobs inside of Baird to become a strategist for our wealth management division. I'm on CNBC, Bloomberg, I'm on Fox Business, I write a blog, I'm on Twitter. Right when I switched jobs, COVID crisis hit. So if I change my job again, I'll be sure to give you guys an update because a crisis is probably due imminently. I'm going to try to do this in 30 minutes. I know that stuff like this can be really boring. I try not to be boring, but this stuff can be really boring. It's just a function of the role and a function of the content. So I'm going to try to keep it interesting with stories. That's kind of one of my goals, is to keep it interesting with stories. And my first one is to remind you that we are still basically going through a crisis. I mean, when you think about the pandemic, when you think about what we've seen since 2020, it's essentially a crisis. And crises have kind of unpredictable impacts on history. We really don't know what the net result of something like this will be. There are many, many moments in history where we've had crisis. Let me give you a couple examples. In the early part of the 20th century, a ship exploded off the coast of Halifax. It's called the Halifax Explosion. 2,000 people died. And one of the results of the Halifax Explosion was that they decided to design cities differently. And there were a lot of children who got killed in the blast, and pediatric care made rapid advances. The city of Chicago burned down. Remember the Great Chicago Fire? The city of Chicago burned down. After that, they changed the way they construct buildings. They started to construct skyscrapers made out of metal. The Chicago Fire essentially changed the way that we think about city planning and city construction. So crises have a really unpredictable impact on history. We don't know what this one will have, but we're going through it right now. And there's something I said on Twitter yesterday that I've been thinking about writing a blog about, and that is the world you knew before 2020 is gone. It's over. Whatever you thought the world was before 2020, it's part of history now. There's no going back to it. We're not going to go back to some stage before COVID hit. That's not how the world works. Surprising events happen and the world adapts and advances. So if you think, oh gosh, I just can't wait till this is over to get back to my life as it used to be, that's a mistake. It's gone. But that's okay. It's okay. We need to embrace the future and embrace all the things that make this country and its business and its entrepreneurs great. And that's change and being adaptable to change. Let's talk about 4 ways the world is broken, okay? COVID has broken the world. Let's talk about 4 ways that COVID has broken the world. First, let's look at U.S. GDP. This is the amount of goods and services the United States economy produces. It's the largest single economy in the world. What you see right there is the impact of COVID. That's the drop in GDP from COVID. And a absolutely massive quick recovery, which is due to a couple of things we'll talk about. But I just like to look at how big of an impact COVID had on the largest economy in the world and the fact that we're already above that level only about 2 years later. Isn't that remarkable? There are some people that predicted when COVID hit that we'd have another Great Depression. And believe me, there were moments in March of 2020 where the stock market was crashing that I thought it was very possible that this thing could just unwind. But we managed to keep the economy intact. There are a couple different things. Again, we'll talk about those. But I do like to at least show the absolute massive impact that COVID had on, honestly, the most complex and successful economy in the world. Let's talk about 4 ways that COVID broke the world. Are you ready? The wage structure of the United States completely broke. The wage structure of the United States has been completely broken by COVID. The minimum wage in the United States, my friends, is still $7.25. It really hasn't been changed. But if you were to drive anywhere around Wisconsin, if you were to drive up these highways, drive down these highways to Chicago, you would notice all sorts of places with signs up that say, what, 15, 16, 18 an hour? Signing bonuses, we'll pay for your college, we'll pay for your health care. There's no way you can hire probably in the state of Wisconsin or any state in the United States below 15 bucks an hour right now. The wage structure of the United States has been completely broken. There was another moment in history where this actually happened. In 1914, across that lake, I guess it would be behind us, wouldn't it? In 1914, across that lake, Henry Ford put up a sign outside of his factory. And he said, I will pay you $5 to work 8 hours in my factory. $5 to work 8 hours. And that, my friends, was double the wage of an average factory worker. That was double. Okay? Remember that double just for a second. Remember that 7.25 is our current minimum wage. So you're going to work 8 hours, you're going to make $5 a day. That was a monumental moment for workers in the United States. It essentially changed the way factory workers were paid. That's about $120 today, my friends. That's $120, okay, for 8 hours of work. If you were to take 120 and divide it by 8, you know what you get? 15. 15. It seems history is not without a sense of irony, is it? The effective wage in the United States has doubled, essentially, since COVID hit. Another crisis with unpredictable impact on history. That's important because this $15 an hour is coming at the lowest part of the wage structure, and that is really, really important. The lowest end of the wage structure, doing better, is just good for society, period. It's just good for society. The lowest end of the wage structure tends to have a higher propensity to consume, too, so them making more money is a positive in the long run. Broke the wage structure of the United States. It broke the working structure for most white-collar workers. There's now something called work from home, and we are 2 years into it. When you go 2 years into working, that tends to be somewhat permanent. Again, there's this notion that we're going to go back to the previous version of the world. That's not the case. In fact, to be quite honest, would you want to work for somebody that wanted to kind of recreate the previous version of the world? I want to work for somebody who's visionary, who's got visionary leadership, who knows how to adapt to a new world. That's who I want to work for, and Baird is one of them. I can tell you that right now. Work from home changes so many things. It changes the pool of available labor. You can hire anywhere. It changes where people can live. We have a housing issue in the United States. There's not enough homes. We're going to talk about that. You can now live anywhere. That tends to spread out the population. Instead of all the smart people being in New York and Boston and LA, they can be anywhere now. That's important. COVID broke the world. It changed the way that we deal with downturns. We handed our citizens 3 different checks in the middle of COVID. 3 different stimulus checks, 2 under President Trump, 1 under President Biden. We also gave them a child tax credit in cash. You could take that. Just ended recently, by the way. We changed the way that we handle downturns. What does that mean for the future? In the future, every time we have a downturn, are we going to hand people money? It's possible. Once you do something for a citizenry, it tends to be hard to walk it back. The next time we have a downturn, will we hand them money? Probably yes. Does that shorten our downturns? Well, it might. It certainly shortened this one. Why wouldn't it work again in the future? COVID broke the way we deal with downturns. And then finally, our supply chains are completely fractured. When you think about inflation, when you think about trying to buy a car. Has anybody tried to buy a car lately? I had to go to Holland, Michigan to buy a Jeep. Holland, Michigan's across the lake. I did a 300-mile search for a Jeep Wrangler, and the only one I could find was in Holland, Michigan. This is a state of 5 million people. There were no Jeeps. Our supply chains are completely broken. Why is that? Has anybody ever heard of something called just-in-time inventory? We used to try to build an economy and have our goods arrive just before you needed them. How does that work when half your population is in a home due to a pandemic? Breaks it. There's something like 60 ships sitting off the shore of LA and Long Beach that cannot be unloaded. Why can't they be unloaded? There's not enough truck drivers to take the containers away from the ports. So it sits there and the ships sit there. and that causes inflation. The amount of goods the economy can produce is not meeting demand. We're going to talk about that in a second. There's another moment in history that's like that. COVID, my friends, has broken the world. And that's just something we're going to have to deal with. There's no answer to this. It's not like we can just snap our fingers and all these things are solved instantly. We're still dealing with these because crises have an unpredictable impact on history. Now I'm going to tell you a little bit about my view of the economy. And again, I'm going to try to keep it quick, simple. I'm going to try to keep it somewhat peppy as we go through here because I want to get to the end section that I enjoy much more than kind of the economic update. That's Jerome Powell. Does anybody know who Jerome Powell is? Jerome Powell is the Federal Reserve Chairman. Federal Reserve Chairman, arguably, my friends, the second most powerful person in the world. I mean, he's in the top three, right? It's probably the President of the United States. Maybe it's, the Premier of China, and then probably Jerome Powell. I mean, seriously, this guy controls the interest rate policy of the United States economy and essentially global markets. Look what he said. And it's something he said recently. They do updates, FOMC meetings. No one knows with any certainty where the economy will be a year or more from now. If somebody comes in front of you and says they know where the economy is going to be a year from now, you should mostly ignore them. I mean, I don't say you completely ignore them because there might be some things you can learn. You can learn how that person thinks about the world. You can learn how that person speaks. You could learn maybe that person has a really interesting take on what's going on. But if they tell you where the economy is going to go, they're lying. They're not lying. They're just making it up. Okay? So I'm not going to tell you where the economy is going because A, do you know how complex the $23 trillion economy is? The amount of inputs and things that can change. Not only that, think about the stock market. I don't try to predict the stock market over the next 12 months because it's a complex system. Complex systems adapt instantly to minor changes in the system. Think of like a butterfly flapping its wings and it changes everything in the system. Same thing with the stock market. So I'm not going to try to predict where the economy is going to be a year from now, but that's okay. I'm just going to kind of give you my simple view of it, just to say this is kind of where I see it right now. We all operate in it. You guys are all both consumers and investors, and you guys are employees, owners. We're going to talk about four things. Do people have jobs? Are people buying things? What does their home situation look like? And what do their balance sheets look like? That's all. That's kind of my simple view. That's all. Do people have jobs? That right there, my friends, is the amount of unemployed people in the United States of America. Right before COVID, it was 5.7 million. By the way, the labor force is about 168 million people. That's working age population, about 168 million. 5 million of them were out of work right before COVID hit. And look what happened when COVID hit. It went to 23.1 million almost instantly. That's over 4 times increase in unemployed people, almost instantly. I can't even tell you how broken that chart is. It's so broken that economists can't even use it anymore for anything useful. I just show it because it's absolutely ridiculous. 4 times the amount of unemployed people basically happened in 2 months. And then look what happened since then. We're back down to 6.8 million unemployed workers. Why are there still 6.8 million unemployed workers when there are 11 million job openings in the United States? Let me say that again. There's 11 million job openings. There's 6 million unemployed people. Why aren't they working? There's a couple different reasons why that gap persists. Okay? The first is that there's people still worried about COVID and they can't go back to work and maybe they don't want to go back to their current job. Maybe their healthcare situation is bad. There are certainly a group of people who died from COVID. We're up to 800,000 deaths in the United States. There are people who took early retirement. There's been an excess of retirements. People who are hanging on to the labor force who are older, who just said, I'm done working. Right? Think about some of the older workers that may have worked in retail or may have worked in other different capacities. They just said, I'm done. I'm not working anymore. Asset prices are up. I'm wealthy enough now. I don't need to work anymore in the labor force. And then the last one is kind of a fraught topic, but immigration is down substantially over the past decade or so. We used to admit about 1 million. There used to be about 1 million net immigrants to the United States. In the early 2010s, we're down to about 200,000. So immigration is down also. That reduces the available pool of labor. So the job market has recovered significantly. That's important. People are working again. I think that will continue to improve this year. This is wages. Now, you don't really have to dig into this chart essentially, but what you're looking at is kind of the growth in wages for the longest time, 2017, 2018, 2019, 2020. See how wages went nowhere? For the longest time, wages have basically gone nowhere. That was the late part of the 2010s. It plummeted in the recession, then now it has risen dramatically. Wages are starting to rise, like I mentioned before, for all the reasons that I mentioned. There just are not enough workers. Companies are going to have to pay them more. I'm a free market economist, my friends. I went to the University of Chicago. When it boils down to it, An employee and an employer bargain over wages. That's how the world works. I want to hire you. Here's what I'll pay you. No, I want to make this. That's bargaining. That's how the free market works. This wasn't government mandated. The minimum wage in the United States is not 15, it's still 7.25. Free market is deciding that wages are growing. This is retail sales. The funny thing is when you go into a recession, people stop buying things. Generally, when you go into an economic recession, people stop consuming goods. Okay? You're not going to buy a new dishwasher. You're not going to buy a Peloton. You're not going to buy goods in a recession. You're worried about your job. You're worried about the economy. Look what happened. Look what happened in the COVID recession. We had that big dip in retail sales, and then it absolutely, my friends, absurdly skyrocketed. Why is that? We were all stuck in our homes with nothing to do, so we shopped on Amazon. We bought Pelotons. We used Zoom. We just bought things because we literally couldn't leave our homes, and retail sales skyrocketed. This is what's driving inflation in the United States. People are trying to buy more goods than we can possibly produce. We cannot meet the level of demand in the economy. Why is that? There's multiple reasons. Think about asset prices. They're at all-time highs. Think about wages. They're all rising. There's not enough goods out there. By the way, the Sendix and Whitefish Bay, the shelves are empty everywhere. It's crazy. People are buying more goods than our economy can produce. If we could actually meet that level of demand, you know what we would have? We would have a roaring 20s. If we could meet the level of demand in the economy, GDP would be in double digits. Okay, so we talked about jobs. They're coming back. We talked about retail sales. People are buying things. You saw the retail sales charts at all-time highs. I'm about to talk to you about something that's near and dear to you. How many people here own a home? I assume everybody. I assume everybody owns a home in here. This is a look at single-family homes for sale in the United States. What do you notice? It's plummeting. Single-family homes for sale in the entire United States, let me remind you, which has 330 million people. This number was actually updated yesterday by my friend Mike Simonson. This is below 300,000. There are less than 300,000 single-family homes for sale in the United States for a population of 330 plus million. It used to be 1 million back in July 2015. It is now less than 300,000. We have a housing crisis in the United States. But not a kind of crisis that we had before. We have a housing crisis that we just don't have enough of them. We don't have enough of them. We're going to talk about demographics in a second, but this, my friends, is just such an absolutely huge topic that nobody's talking about. Nobody is talking about. There are not enough homes. And by the way, you can't just throw up new homes instantly. There's regulations. You have to buy the land. You have to get approval. You have to get permits. You can't just throw up more homes instantly. And you have, my friends, the largest demographic in the United States all coming into their prime. We're going to talk about it in a second. Do you know who the largest demographic in the United States is? It's millennials. They're the largest demographic. We're going to talk about that in a second because that's one of my favorite takes. But let me just remind you that when you have this problem, when you don't have enough homes, everybody's home prices go up. You know what home prices increased last year? Double digits. Do you know how often you get double-digit home price gains outside of a bubble? Never. Never. You don't get double-digit home price gains. You should expect inflation on your home. You should expect a couple percent a year. A couple percent. You got double digits last year. If you have a mortgage below 3%, which I hope you do because you've had multiple chances to refi below 3%, you've made the best mortgage trade of your life. It's arguable that you should try to keep that debt as long as you can. Inflation is double the rate of your mortgage. Inflation is eating away at your mortgage payment. Do you know how fantastic that is for a borrower when inflation is double your mortgage rate? You're paying back with future deflated dollars. So what this has done is this has surged everybody's home equity. That green line is everybody's home equity. The blue line is just mortgage debt outstanding. Equity has surged without a commensurate rise in debt. This is not a bubble. People's homes are just soaring in value and they're not taking on more debt. So the housing market is a huge tailwind in the United States. Huge. For the vast majority of people, a home is their primary financial asset. For the vast majority of people, their home is literally their primary asset. And home prices are soaring. Not only are home prices soaring, this is a ratio of people's debt service payments to their income. Okay, so think about the numerator is how much you have to pay to manage your debt. The denominator is how much you make per year. That ratio is plummeting. Absolutely plummeting. Why? Interest rates are falling. Interest rates are lower. People are making more money. So now household balance sheets are as strong as they've ever been. What I'm trying to tell you guys is the economy is in good shape. Home prices are rising. People are buying things. Jobs are coming back. Their balance sheets are in good condition. Those are all positives. Those are all great for the U.S. economy. We just can't meet the level of demand because of all the things I mentioned that were broken, which has kicked off inflation. This is the largest inflation spike since the late 70s, early 80s. And a lot of you, I'm sure, lived through the 70s. I see some faces in here that definitely lived through the 70s. And remember what it must have been like when inflation was running in the double digits. I don't, okay? I'm 48. I'm the greatest 48-year-old you'll ever meet. But I don't know what it's like to live in the 70s. I have no idea. I was zero in 1973. Why is this happening? Well, all the reasons I just mentioned. We just can't produce enough goods to meet the level of demand. Balance sheets are strong. Jobs are coming back. Wages are going up. You can't buy a car. You can't buy panko breadcrumbs. I couldn't buy them yesterday. We can't meet the level of demand because the economy is primed and people have so much money in their pockets. There's another moment, my friends. There's another moment that was just like this. And you know what it was in history? It's not the 70s. You know what the analog to today is? The end of World War II. The end of World War II. At the end of World War II, the U.S. economy was geared to produce tanks and planes and weapons. Okay? The war ends. All those GIs come back. Okay? They start businesses. They start working again. They start moving to the suburbs and starting families. And you know what they demanded? Goods and services. The war was over. I want to go out to a bar. I want to buy a car. I want to buy a house. You know what the U.S. economy was not geared for? Any of that. It was geared to produce war goods. So inflation after World War II started spiking. Then it fell and it spiked and it fell, just like it's doing now. Because the economy wasn't geared to meet demand. It's the same situation. The economy needs to ramp back up to meet demand. We need to get through the virus. We need to be able to operate all the ways that we did before. Then inflation will come down, but it might still be with us for a while. And by the way, if you struggle with inflation, if you're worried about it, talk to a financial advisor. I know plenty of them down the street here. Can help you plan for stuff like this. But remember, if you're sitting in cash right now, say you have $1 million in cash right now. Okay, I'm just going to pick $1 million out of thin air. Every single year, inflation's eating $68,000 of it. You lose that right away. $68,000 of your million is being eaten by inflation if you're just sitting in cash. It's taking it straight from you. So just remember, while you're sitting in cash, worried about the stock market or anything else, inflation is destroying your money at a rapid pace right now. Don't sit in cash. Make sure you're not sitting in cash. Find a way to plan through this. Again, I know plenty of people who can help you. So that's the building that Jerome Powell sits in. It's in Washington, D.C. If you go right down this little walk right here and take a left, there's a guy selling water for $16 a bottle. It's a really good deal. D.C. is hot in the summer. It's a good deal. So the Federal Reserve is debating raising interest rates right now. When they raise interest rates, they're trying to fight inflation. They're trying to slow down speculation in the economy. And that's probably what they'll do this year. When that happens, my friends, that generally tends to be bad for the equity markets. It tends to be bad. You're trying to slow the economy down. You're trying to stop it from overheating. So that's something that we're watching, something I'm watching. It's not necessarily bad for the stock market. It just depends on how fast they hike. It depends on how many hikes they do. If you remember in 2018, the stock market went down 20%, kind of crashed at the end of December 2018. They hiked too much. At the end of 2018, they said, we're done hiking. Sorry about that stock market crash. I'm hoping they learn from that lesson and they won't have to relive that, but it's something that we're thinking about, something I'm thinking about. So I think this is a first half, second half story. First half, we still have all those tailwinds that I mentioned earlier. Hopefully we get to the other side of the virus. Like Dr. Bob said, maybe the second half of the year is much better in terms of the virus, in terms of its spread. But the Fed will start hiking in the second half of the year, and then we need to start watching what that does to the stock market and the economy. That's important. If you want to, again, follow any of this, you can follow my blog. You can follow my Twitter account, bullandbear.com. We'll get you that. I'll be talking about this stuff endlessly, both on my blog and live. If you guys want to have another event in the second half of the year, I'm happy to come back. Just consider yourself. You guys can consider me your personal blogger strategist if you like. All right, I have 2 takes for you before we move on. 2 takes. I'll try to do these as quick as possible. I think I'm like 20 minutes in. 2 takes, okay? I'm going to argue, my friends, that baby boomers and millennials are the same thing. You ready? Did you hear what I just said? I'm going to argue that baby boomers and millennials are the same thing. Whew, boy, that's a spicy take, believe me. Demographics is what really matters to the whole world, okay? Demographics. This is what I wrote. That's me. That's my blog. I wrote, what if millennials and baby boomers are one and the same? Are they one and the same? Well, they certainly don't like the same music. They don't like the same clothes. They don't like the same types of cars and houses. But I'm going to argue that they are from an economic point of view. And all of that impacts everybody in this room and impacts everybody out there. I'm going to make the case that they are one and the same. You ready? This is a look at demographics of the United States. The far right there is the greatest generation. God bless them all. There's not that many of them left. The silent generation, the baby boomers. If you were born between 47 and 55, you're a baby boomer. Then comes me, Gen X, born between 66 and 81. We're the smallest generation. Wedged in between two giant generations. I'm sorry, we're not the smallest. We're wedged in between two giant generations. But we did bring you Pearl Jam and Nirvana, so I'll give us some credit for that. The millennials are the largest generation. That yellow block you see there. They are the largest current generation of the United States of America. You might say, but Mike, Gen Z, next to it looks bigger. Well, they haven't cut off Gen Z yet. They haven't named a new generation yet. They're not 86 million. They just haven't named the next one yet. So the current generation, largest generation, is millennials, 82 million, followed by baby boomers. So let me tell you why I think they're one and the same. Are you ready? Let me posit, let me say, let me theorize that the prime of someone's economic life, the prime of your economic life, is somewhere between your mid-30s and mid-40s. Now, don't come up here and tell me that yours is older and yours was longer, and yours was younger. Like, I'm just doing a kind of a theory here, okay? The prime of your economic life is between your mid-30s and your mid-40s. You're further into your career. You're starting a family. You're buying a home. You're starting to make more money. You're starting to invest. You're starting to engage in the economy more. You're buying cars and boats and egg bites at Costco and all these things, right? The prime of your economic life is that kind of decade between your 30s and 40s. So the baby boomers, the largest generation for the longest time, started to hit their prime in the early 80s. The bulk of them started to hit that prime, that decade prime, in the early 80s. What happened between the early 80s and the year 2000? This is the best bull market in history. 20 straight years, the best bull market in history. The economy absolutely soared. I'm sure a lot of you remember the 80s and 90s. The largest generation was buying things like homes and cars and starting families and career and investing, all those things. The largest generation was driving the economy, okay? And then they started to move out in the year 2000. What happened between 2000 and 2013? Well, we struggled, right? The economy went nowhere. The stock market went nowhere. That was my generation's prime. Apologize, my bad. We just weren't big enough to kind of carry the economy after the baby boomers. You guys see where I'm going with this? Hopefully you do. You know who's just coming into their economic prime now? The largest generation in the United States. The millennials are just now coming into their economic prime. And they're coming into their economic prime, my friends, with interest rates near zero, with home prices soaring, with an economy that's geared to absolutely boom once we get to the other side of this. They are the ones that will drive it, and they will drive it for the next decade. They will drive it for the largest generation will buy homes and cars and start families, continue their career, invest. They will drive it now. And behind them are Gen Z, and they are also large. So if I was an older investor, if I was a retiree, I would feel very comfortable with the way the economy is going. Because let me remind you that an economy is just the number of people working times what they produce. That's it. That's what an economy is. How many people are doing things, and what are they producing? If you were to look into the future, and by the way, this is the most knowable thing about the future. Demographics are the most knowable thing. Do you know what's going to happen over the next 20 years in most developed nations to their working age population? It's going to plummet by large amounts. China at one point will have less than 1 billion people within the next 20 years. Remember when they had a one-child policy? You can't fix that. You can't fix a one-child policy. You could fix it with immigration, but that's a pretty fraught issue. It's a really fraught issue. Think about all the major developed nations, France, Germany, Japan, China. All of them are going to plummet over the next 20 years. The United States is going to plummet the least of them, such that over the next 20 years, our working age population will be flatlined, but it won't plummet as much as the other nations will. That's important. You might hear this thing that China is going to eat the U.S.'s lunch, or China might take over that. That's not true. It's absolutely not true. They have a demographic problem that they cannot solve. The Wall Street Journal, by the way, wrote about this a couple months ago. Let me just end on this. This is my last thing. Then you guys can ask questions if you want. The great thing about this is that we're sitting in a war memorial. The great thing, I've never actually done this part of my speech, which is the last part of my speech, in a war memorial. And I find that really fantastic, because that right there is Victor Prather, you see on the screen there. Victor Prather is a member of the greatest generation. Victor Prather was a naval doctor from Michigan. Again, across the lake. You got a lot of Michigan ties here. Fought in World War II. Won the Distinguished Flying Cross. Victor joined the astronaut program. It's part of something called Project RAM. So Project RAM was, they were testing a new spacesuit for the Apollo program. And there he is. This is the Mark IV spacesuit. And in order to test a spacesuit, what you did is you went up on a balloon off a carrier. You see it over there. They'd put you on a carrier. They'd launch the balloon. You would test the suit, right? The hoses, the zippers, the shoes, the helmet, the oxygen, temperature, all that stuff. You would take this balloon up to about 100,000 feet to test the spacesuit, and you would come back down, okay? When you come back down, when you reach 10,000 feet, you can open your mask. Okay, you tested the suit. You're below 10,000 feet again. You can open your mask to breathe again. The test is essentially over. So you're supposed to land on the carrier. In this instance, Victor and his commander missed the carrier. They landed in the water. Okay? Tested the spacesuit, had gone through the whole process. They landed in the water, unfortunately. Now, of course, they have contingency for this kind of stuff. Of course they do. Land in the water, they send a helicopter to go get them. Send the helicopter to go get Victor and his commander. They send a hook down. You put your foot on the hook. You go back up to the helicopter. They send it down for Victor's commander. He puts his foot on the hook. He goes back up to the helicopter. They send it back down for Victor, who is still in the water. Victor puts his foot on the hook. He slips backwards. His suit starts to fill with water because his mask was open. And our friend Victor died that day in 1961 in the water. So why do I tell you the story? Why do I tell you the story about Victor in the Mark IV spacesuit? Let's think about the list of risks they must have had for Victor. I bet it was that long. I bet it was that thick, right? I bet they thought of every single risk to Victor they could possibly think of. Where he launches, where he lands, what the wind looks like, temperature, oxygen, hoses, zippers, gloves, helmets, boots. I bet they thought of everything. But yet Victor died that day. He died that day from something they couldn't see. He opened his mask like they always do. And he slipped into the water when the helicopter tried to retrieve him. So why am I telling you this story? Well, at the end of 2010, the United States exited the global financial crisis. And over the last 12 years, we've seen one of the second best bull market in history. The second best. Did you know that last year was arguably one of the best years in stock market history? Just last year. The best year in stock market history is 1995. Many people are saying 2021 was the second best year in stock market history. Since 2010, $10,000 has turned into $50,000. It is an incredible amount of wealth creation. If you haven't benefited from that, honestly, again, I know a bunch of people who can help you. If you have not benefited from the second best bull market in history, then something's wrong with your plan, okay? So I want you to ask yourself, over the last 12 years, where $10,000 turned into $50,000, what was the biggest risk to your money over the past 12 years? Let's do the list like they must have done for Victor, okay? Let's do the list. What was the biggest risk to your money? Was it who sat in the White House? How much do we talk about who sits in the White House? Literally by the minute. How much do we talk about who sits in the White House? It's absurd how much we do. There's been 3 presidents, okay? President Obama, President Trump, President Biden. There's been 3 presidents over that period. How much do we talk about it? As much as I'm sure they talked about the oxygen, okay? That much. Was it who controls Congress? Is that the second most thing we talk about? Was it who controlled Congress? Was it trade wars? Was it tax policy? Was it the makeup of the House and the Senate? Was it who won what election? Was it who controls Congress? Was it who the Federal chairperson was? Federal Reserve chairperson was? Bernanke, Yellen, Powell. Interest rate policy, QE. Was it who sits in that building? How much do we talk about these 3 things? Just think. I know you know it's a lot. It's probably all we talk about. But in the end, it was that. It was that. That was the biggest risk to your money. In 12 years. That. How many people had that one? How many people talked about that? Anybody? There's 3 events that were the biggest risk to your money in the past 20 years. 21, 22 now. Jesus, time is flying. 3, Covet, the global financial crisis, and 9/11. Those were the 3 biggest risks to your money in the past 22 years. Nobody saw any of them coming. Why? Because risk is what's left over when you think you've thought of everything. It's just how it is. It's just how it always will be. You or me will not see what's coming. But that's how it's always been. Always. I could sit up here and talk to you guys about the midterm elections. Okay? I could do strategies for you about whether the Democrats or the Republicans win, but do you honestly think it matters over the long run? Do you really? Because it hasn't in the past 22 years. I'm sorry, the past 100 years. In the past 100 years, $1,000 has turned into 5 million. How many presidents and Congresses are in there? How many? I get so worked up over this stuff. I really do. I'm sorry. I really get worked up over this stuff because we think about the wrong things all the time. The United States economy is built on its people, its companies, its rule of law. It's built on the people in this room. Okay? We are what make it great. We, not these other things. We are. And it always has been that way. People always get pessimistic about the future. Here's a problem with being a pessimist, all right? It's a scale. If you head down towards pessimism, you're going to land as a cynic, right? You're going to land as a cynic. And that's, it's a lot of people end up there. You start to think things aren't as good as they used to be, or maybe something's wrong with the state of the world. But if you keep going, you're going to land in pessimism. If you land in pessimism, it's nearly impossible to come back from it. It's nearly impossible. And when you land down there in pessimism, you know what that is? It's an ideal way to go broke. If you want an ideal way to go broke, be a pessimist. Think the people that started Apple or Google or Facebook were pessimists? Think the people that built the city, I don't want to build near that lake, it's cold. Not building that city, I'm moving on. No, they were optimists. They built this city. They built all the cities in the United States. So I just want to remind you that when you think about the future, when you think about your money, when you think about the economy, the things that will matter will be surprises. The lesson of COVID isn't that we need to be better prepared for pandemics. We do, but that's not the main lesson. The main lesson is that the world is a surprising place. That's the main lesson. The world is a surprising place, and it always will be. Okay, that is it. I've been passionate. I've been hopefully somewhat entertaining and educational. If you have any questions, if there's any at home, again, you can text Mary. But I'm really quite, my friends, again, I'll end on one thing. There's generally almost never questions at events like these, believe me. So if there's none, believe me, it's not unusual that you're not asking questions. Be optimistic about the future. We're going to get to the other side of this pandemic. This pandemic's not unbeatable. We'll get to the other side of it. The Spanish flu killed 3% of the world's population. After that came the Roaring 20s. Right? I'm not saying that it's going to be the same this time. It never is. But we'll get to the other side of this. The United States economy is going to be driven by the largest generation. You know what you really want to own right now? A home. I don't know if I've made that patently clear enough. You definitely want to own a home. There just aren't enough of them, and the largest generation is going to be out looking for them. Do you know how many homes are for sale in Whitefish Bay? It's like 1. It's ridiculous. There's like 1 home. So, be optimistic about the future. Understand that the world's a surprising place. You'll be way better off if you leave this event just knowing that all the things you're talking about and worrying about, the market already knows about them. If you're worried about the national debt, I promise you the market knows about the national debt. If you're worried about inflation, I promise you the market knows about inflation. Are you worried about the midterm elections? I promise you it knows everything about the midterm elections. The market digests every piece of information instantly. Okay? Instantly. The reason it crashed last year is because it didn't know what COVID was. Last year. God, it's 2 years now. My Lord. The reason it crashed in March of 2020 is it didn't know what COVID was. It had no idea. That's why it crashed. It knows what COVID is now. Cases are soaring. The stock market closed at an all-time high yesterday. It knows what COVID is. It knows the treatment. It knows what the death count looked like. It knows what the case count looks like. The market is discounting all this information. I'm going to leave you with 2 things that are guaranteed to improve your life. Are you ready? And then I'm going to stop talking. 2 things guaranteed to improve your life. By the way, when somebody in my industry says guaranteed, usually you get fired or sent to jail or something. So this is a risk for me. 2 things guaranteed to improve your life. Number 1, watch less news. Just watch less news. I just said guaranteed to improve your life. That is 100% true. Watch less news. Okay? Number 2, and Dr. Bob's going to tell me this is 100% true. Number 2, guaranteed to improve your life. Just walk more. Just walk. I'm not even saying run. I'm not saying buy a Peloton. I'm not saying lift weights. Just walk. There's actually incredible clinical articles about what just walking does to the human body in terms of both the brain and the physical makeup of your body. Just walk more. Take a 20-minute walk. Guaranteed to improve your life. 2 things. Look at that. I gave you a guarantee right at the end of this. So, thank you guys so much. I talked too much. Thank everybody at home. Wait, hold on. Do you have a question? Oh, wait, there are questions. I can't believe it. That's a great question. I think when investors are starting... Oh, sorry. So the question was, should the average investor just stick with index funds? It's a good question. I think that there's unfortunately kind of a nuanced answer to that. Number one is, when a young investor comes to me, say in their 20s, and says, Mike, what's the best way to start out? Automated investing into an index fund makes a lot of sense, right? You're just trying to get your toe into the water. You're just trying to automate your investing. You're trying to start to participate in that long-term kind of growth of the economy and the stock market. It's impossible to answer because, number one, I don't know what that person's view of risk is. I don't know how complex their financial life is. When it comes to financial planning, I believe that your asset allocation matters much more than your security selection. It's a fancy way of saying how many stocks do you own and how many bonds do you own. I think that's more important than what exact stocks you own and what exact bonds you own. As you age in life, obviously you want to add more bonds. That's kind of the staple of asset allocation. But I think that index funds could play a role in a large majority of investors' portfolios because you're trying to just own the greatness of the United States. If you want to just own the greatness of the United States and its economy, index funds are a great way to do that. So the answer is maybe. Again, because the answer is maybe. But for younger investors, it's actually very smart to just start out automating into an index fund. Paul Westfall, good friend of mine. So I'm going to do a quick answer to this. I did a video on Baird's YouTube channel about the national. I'm sorry. So the question was, should we worry about the national debt? What about the national debt? Is that an issue? The short answer is no. Paul, you should not worry about the national debt. No, I don't think it's an issue. I've done a video on Baird's YouTube channel about this, and on my blog, I wrote something called, "What does the balance sheet of the United States look like? Is the United States bankrupt?" This is a question we get all the time from people because, again, they're worried about something that they think might impact the market or the economy, when I would answer, the market knows what the national debt is. It's always known what the national debt is. Not only does it know, it has grown the entirety of the United States' history. National debt has grown every single year. It's grown dramatically recently because we had to fight a war. It also grew dramatically during World War II. There are moments in history where the national debt rises dramatically. What's going to happen is the same thing that happened at the end of World War II. Okay? When the United States ended World War II, national debt was above 100% of GDP. Did we pay it back? Did we write a check for all the tanks and planes? No. We outgrew that level of debt. The economy grew faster than the debt. That's what will happen in this instance also. We will grow faster than our current levels of debt. So by the mid-'80s, debt to GDP was the lowest level it's been in half a century. So it's going to take a while. At the end of World War II, it took close to 40 years to outgrow that level of debt. Same thing here. We're going to outgrow that level of debt. So, Paul, I would say no. And I would say that if you're making any sort of investment decision based on what the levels of the national debt are, I think that's a colossal mistake. I think it's just the wrong thing to worry about. Oh, there's another question. Sure. Yeah, I think it's over. Yeah. What do you think is going to happen? What are your predictions there? Are there other cryptocurrencies like Ethereum that are going to? Yeah. So the question on cryptocurrency, just the general state of it. It's something that the wealth management industry, the financial services industry, is still kind of grappling with. There's no great way for the average investor to get into cryptocurrencies. There's no investor protections. There's no, if you lose your password, your money's gone. There's lots of risks that still kind of exist with investing in cryptocurrencies. That's why, again, like a firm like Baird, we're trying to be thoughtful about it, but we're still we don't have a lot of regulatory guidance. We don't have a lot of great products that we can use for our customers. So it is something, though, that I think 2022, I think it will really start to grow more and more. I think cryptocurrencies are here to stay. And I will say Bitcoin is now, Bitcoin started in 2008, okay? Yesterday was this is quirky, but yesterday was the anniversary of its birth, essentially. The first block of Bitcoin was mined on January 3rd of 2008. So it will be something that will continue to grow. Bitcoin mining, by the way, there's 21 million that you can mine. There's 21 million total, according to the program. They're going to hit that cap sometime within the next 100 years. So they're at 18 million right now. It reduces the amount. Every time somebody mines a block, eventually it reduces the amount that gets rewarded. Again, this is highly, cryptocurrency technical stuff, but it's going to take at least another 100 years to hit the cap on that. There are other cryptocurrencies like Ethereum and Solana and Tether. There's a whole bunch of other ones that I think of them a lot like the dot-com companies at the end of the 90s, right? There were so many dot-com companies, most of them failed, okay? The vast majority failed. I grew up in the late 90s as an investor. The vast majority failed. That's what's going to happen with cryptocurrencies. The vast majority are going to fail. There's like 3,000 coins, all right? All 3,000 are not going to be a thing. There's a couple that will survive. Dot-com turned into Amazon and eBay. And some dot-coms turned into something. And I think that will be the same case. What they will be, I don't know. But I know that the ones that have the kind of biggest network effects are the Bitcoins and the Ethereums and the Solanas. You're starting to see growth of something called NFTs. That's a topic for another time. I think what's going to happen, my personal opinion, is that over the next few years, we're going to move towards a world where cryptocurrencies are more widely accepted into a portfolio. And these are highly volatile. These things lose half their money all the time, half their value all the time. I think you're going to continue to see adoption of it. It will spread, but some will survive and most won't. Unfortunately, that's kind of tough to figure out. But I do think that one of my theses over the next few years is something that more and more people will start to think about and incorporate into a plan. And that's my view. Put it into a plan. It's not, just go get rich in, Dogecoin or something. That's a mistake. Anyway, all right. Thank you so much. Todd, thank you.
Mike, great presentation. Thank you for joining us on this first Tuesday of 2022. It's a pleasure having you. And in honor of leaders like you who come to speak to our club, we will make a donation to the YWCA of Southeastern Wisconsin, whose mission is eliminating racism, empowering women, and promoting peace, justice, freedom, and dignity for all. Also, as a sign of our appreciation, we have one of our lovely Rotary connecting mugs for you as well to remember this presentation. Hopefully you got one last time, and now you can have a pair. So, a couple last reminders before we adjourn. It's chilly out there, so the next Coffee Connector group, it will meet virtually on Thursday, January 13th at 7:30 a.m. So that allows you to brew up your favorite blend at home and join your fellow Rotarians online. Everybody can stay warm and cozy, and it says here pajamas are welcome. So if you are interested, contact Teresa Reagan or the Rotary office for the Zoom link. Next Tuesday, we've got lunch with Dr. Robert Yablon of the UW-Madison Law School for the latest on redistricting. Wisconsin's 2020 redistricting cycle has obviously brewed up a storm, and redistricting is now at the Wisconsin Supreme Court with a 3-judge panel waiting in the wings. So Professor Yablon will join us to share his thoughts on redistricting in Wisconsin. He's a recognized redistricting expert and co-directs the law school's State Democracy Research Initiative. Last reminder is that everybody on your table has your forecasts. Please fill those out. Your prognostications on the Dow Jones, the value of a Bitcoin, and the value of 1 barrel of oil a year from today. So fill those forms out, leave them on the Rotary table on your way out, and next year at this time we can crown the Rotary Prognosticator of 2022. With that, Happy New Year, everybody. Make 2022 a great year. This meeting is adjourned. Thank you.